One wrong click on your tax return could cost you $1,500. By the end of this video, you will know exactly what to do. 6 months ago, I signed up to drive for Uber. It was easy money, flexible hours. Nobody warned me that tax season would feel like a trap. Then a friend sends a text. Hey, did you set money aside for taxes? You're a contractor now, not an employee. Panic sets in fast. I'm curious about the tax filing process for Uber drivers, but I'm not sure how it works. Let me check my laptop. There are a lot of results, but none of them seem to be clear. You're frustrated, but you're not sure where the video is. Somewhere out there is a video built just for rideshare drivers. This is that video. Frustrated, you close the laptop. Somewhere out there should be a tax guide built just for rideshare drivers. This is that video. Filing wrong doesn't just shrink your refund. It can trigger penalties, audit flags, and interest charges that grow every month. On the flip side, most drivers overpay by not claiming mileage, phone bills, car washes. It adds up to real money. This is a complete screen-by-screen walkthrough built for Uber drivers. No accountant degree required, just plain English and real numbers. We'll cover which software to use, where your 1099 forms go, what expenses you can deduct, and how to review before you submit. Grab your 1099 forms, your mileage records, and a notebook. By the end, you'll know exactly what the IRS expects from a rideshare driver. Your most important document is the 1099K. It's the total amount riders paid through the platform. Here's the shock. That number is not what you actually kept. It includes Uber's fees before a single deduction is applied. The IRS reporting threshold has changed several times. Even if you earned less, you might still owe tax on it. Even if Uber never sends you a 1099K, every dollar you made driving is still taxable income you must report. You'll find your 1099K inside the driver app's tax section or emailed directly from Uber each January. Download it as a PDF, save a backup copy, and print a version. You'll want both when you sit down to file. If you also drive for Lyft or deliver for DoorDash, collect forms from each platform, and you must report all of them. Before we go further, set up one folder, digital or physical, and drop every form and receipt into it as tax season approaches. Your car is your business, which means it's also your biggest deduction. There are 2 methods to choose from, and picking right matters. The standard mileage method lets you deduct a set amount for every business mile driven, no receipts for gas or repairs required. To use this method, you need a mileage log. A simple notebook works, but apps running in the background can track every trip automatically. The actual expense method lets you deduct a percentage of gas, insurance, repairs, and depreciation based on business use. High mileage, older car, standard mileage usually wins. Lower mileage with heavy repair bills, the actual expense method might save you more. One catch: if you start with actual expenses, switching later gets complicated. Choose carefully in year 1. Only miles driven while working count. Your commute does not qualify, so keep personal and business trips separate. Start and end every shift by glancing at your odometer and writing the number down. 30 seconds now saves hours later. Every fare passes through Uber first, and their service fee gets removed before you get paid. That fee is fully deductible. Booking fees, split fare fees, and safe rides fees all count as business expenses. They add up more than most drivers realize. Your annual earnings statement inside the driver app usually lists these clearly, so you don't have to calculate them manually. A few dollars here and there feels small, but across a year, those fees often total well over $1,000. Save a copy of that annual statement. If the IRS ever questions your return, this document backs up every fee you claimed. Remember, every fee Uber charges you is a business expense, which means it can start working in your favor when tax time comes around. Many drivers don't stick to just Uber. If you also drive for Lyft or deliver food, your tax picture gets more complex fast. Good news, you typically combine all rideshare and delivery income on one Schedule C, treating it as a single driving business. Still, keep separate mileage notes for each app during the year. Some expenses overlap and others don't count for every platform. When it's time to file, you'll add the gross amounts from all platforms together before applying your combined deductions. Be careful not to double count shared costs like your phone or car insurance. Deduct the business use portion once, not per app. If juggling 3 apps feels overwhelming, this is exactly where tax software built for gig workers earns its cost. Now let's walk through the software itself. Choose a version that supports self-employment income, not the basic free version most people use. Start by creating your account and entering your basic personal details exactly as they appear on your driver's license. When the software asks about your income type, select self-employment or independent contractor. This single choice shapes your entire return. Pull out your 1099-K and enter the gross amount exactly as shown. Do not subtract Uber fees here. The software handles that separately. Next, the software builds a Schedule C for your driving business. Use something simple, like rideshare driving services. Now enter your total business miles for the year. For many drivers, this becomes your largest deduction on the entire return. If you're using actual expenses instead, this is where you'll enter gas, insurance, repairs, and registration costs, one line at a time. Your phone runs the app that makes this job possible, which means part of your phone bill is deductible. Estimate the business percentage of your monthly phone bill as a deduction. Phone mounts, chargers, hand sanitizer, tissues for passengers, and car washes all qualify as business expenses. Small purchases like these quietly add up over a year. Most drivers also qualify for the Qualified Business Income Deduction, an extra write-off equal to 20% of your net profit. The software then calculates your self-employment tax, which covers Social Security and Medicare since no employer is splitting that cost with you. If you owe more than a certain amount, the IRS expects quarterly estimated payments, not just one lump sum in April. Set phone reminders now for April, June, September, and January. Missing those dates is one of the most common costly mistakes. Before moving forward, scroll through the deduction summary slowly. This is your chance to catch anything you may have missed. Cross-check the software's totals against your own notes. A 5-minute comparison can catch a costly typo before you file. The software generates a final summary showing your refund or amount owed. Read every line before you scroll to the bottom. Your cursor hovers over the Submit button. Take a breath. In this moment, months of tracking finally comes together. Click. It's done. Your return is filed accurately and specifically for how you actually earn your income. Take one driver logging 25,000 miles in a year. The standard mileage method saved him over $4,000. Now take a driver with a newer leased vehicle. Higher actual costs meant the actual expense method saved her nearly $3,000 instead. Same job, same app, completely different outcomes. The best deduction strategy depends entirely on your specific vehicle and mileage. A third driver worked Uber, Lyft, and food delivery all in the same year. Without organized records, he missed nearly $2,000 in missed deductions. Compare that to a driver who used generic software, entered everything incorrectly, and later owed penalties plus back interest. Every success story shares one habit: consistent record keeping. Tax software only works as well as the numbers you feed it. Cash tips from riders are still taxable income, even if no platform reports them. Many drivers forget this completely. Driving to pick up groceries between shifts and logging it as business mileage is a red flag the IRS specifically looks for. Skipping quarterly payments and paying everything in April can trigger an underpayment penalty, even if the total amount is correct. Forgetting the phone deduction is common because it feels small month to month, but over a year it's rarely a small number. Some drivers mistakenly file as a regular employee, but Uber earnings belong on a Schedule C, not a standard W-2 wage form. And finally, waiting until the last week of tax season guarantees stress. Start gathering your documents in early February instead. From the 1099K to mileage tracking, service fees, and phone deductions, you now have the full picture built specifically for your job. Now you can get back behind the wheel knowing exactly how to handle taxes without the dread hanging over your next tax season. If this walkthrough saved you a headache, tap like and leave a comment telling us which platform you drive for. Subscribe for more real-world money guides built for gig workers, from taxes to tracking expenses to breaking down health insurance for independent drivers.